short and medium term differences clearly have a dual purpose. Now we're just going to go back and forth and check our trades as we're going along. Here we can see our Euro US is moving along relatively nicely. We're at our trade for today, Great Britain US, we've got 61.7. So before the trading day, we're at 9:33 a.m. The market is just beginning to open, and with the market just opening, we've already got 350, 360, well, actually, yeah, almost $400 in profit before the market's already started on a $53,000 account. That's a very strong. So I could close everything down, and because we're in a training today, I'm not going to close it down. I'm just going to let it run because the point I think has been made that the entry points are zeroed in, and from there we're in the trade. Now we want to assess what to do with these trades. So that's a good breakdown of the Euro US. Now again, just touching on the stops, you might say, well, that's kind of a wide stop. But the reality is, guys, you par your positions back, you identify your key levels of support using the program, 123.72. If I'm entering at the 125.66 area, there's about a 200 pip stop there, but I'm not getting caught up in this intraday stuff. I do day trade. That's exactly what I'm doing with Euro US and Great Britain US right now. But on Euro US, what I'm doing right now is very similar to what I've been doing for the last month on the Great Britain US. Now again, looking back to the dates when I started noticing that my indicators from Vantage Point on Great Britain US were rolling over to the buy side. We can see the dates that I've taken this trade. This is back in the early part of June, June the 2nd. We're now, that was a month ago, and somebody would say, oh my God, a month, you're holding a trade for a month, how could you possibly do that in Forex? Well, the reality is sometimes I hold trades for 3 and 4 months. If, again, I'm looking, I've locked in my profit, I've done what I need to do, and until I get a clean signal from Vantage Point that I'm going to either get a trend reversal or a very significant corrective move, there is no reason for me to exit this. I'm actually adding more positions. So, and that's the one thing we want to, be mindful of, is that we can work these orders and, don't get into panic type trading. And, the only thing I can tell you is, with my experience with Forex is that this market essentially does 50 pips in the morning before it even has its coffee. So a 30 or 40 point stop loss. There's a lot of programs out there, a lot of advisors that suggest $10,000 account, $100,000 trade, 30 point stop loss. The reality is, in my opinion, that is a recipe for disaster. So I usually keep my positions below my margin requirement. So if I have $50,000 in my account, the maximum size of position I will do is $50,000 trade, which is $5 a pip. I will not do a million. I will not do 100,000. I will do a series of 20, 30, 40, 50K trades, but I will not go over that leverage of 1-to-1. But technically what I'm doing is, if I have 4 positions of 50K, that is a 4-to-1 strategy, because that would mean I have 4 positions equal to my available capital. So it's very important to remember that the only person who wins with a highly leveraged trade is your broker, and that's a very strong piece of advice that I can give everybody. Now let's go in and have a look at our second trade, the British, that's active right now yet again, the British pound US dollar. I've got this profit calculator put on here so everybody can see this. Right around the time when I started recommending, and I took a lot of heat from this, I'll be perfectly honest, with my clients and some of you nice people on Trader Planet also, that, Great Britain US, what am I doing? Well, the reality is, the true strength indicator from Vantage Point crossed right here. That was a huge warning sign for me. That gave me almost a 1 week, put me ahead of the game by almost 1 week. The predicted MACD, same thing. Predicted long-term difference, hitting that negative 300 mark. Everything told me that this thing is going to reverse. I then started putting out on Trader Planet and to my own clients buy signals between 143.50 and 144.85. I said, that's it. Everybody move. This is the time. So This is the outcome of that. 849 pips, buying off this level up to a current high, which we just got last week. We actually hit the one over the 152 level yesterday too. So another very good trade. But the main thing is on a single contract, not trading 6 different pairs and all this stuff, just one single trade. You hold on to that one trade for about a month, and that's your outcome. 849 pips. Why the rest of the market got stopped out on their shorts. That's the reality of what happened here. These leading indicators from Vantage Point in heavily volatile markets suggested the downtrend on Great Britain US is pretty much done for now. And this, again, it's a very interesting outcome. But where does this leave us now for today with today's trades? Well, we are in overbought territory. That's the reality. The predicted MACD, however, or the predicted true strength indicator from Vantage Point, one of my favorite indicators on this program, very stubborn, refusing to cross the trigger even though it's at positive 40, which is heavily overbought. It still maintains a buy signal. So that's what gives me the confidence to get back into that long trade again this morning and hold that position and hold my other positions, but still lock in profit just in case something, you know, globally happens that is out of my control. Certain fundamentals, guys, are just not within our control, but usually after a big event happens, the market goes right back to where it was. So what I'm looking here for now, the next resistance I see is up in this 154 level. We should be able to push into that area. We may get a significant retracement first, but the retracement, where the key thing, guys, identify where is it going to retrace to. Well, these numbers are in front of us, 151.39, 150.77. That's where I recommended the area to get into this position today. This is our focus. That's exactly where the market went to. I'm going to bring that up just so everybody can see this. Great Britain US, the low of the day, 150.80, moving in and buying off that level. It's a beautiful trade. We're now up 73.7 pips, $296 on a little wee $40,000 trade. You know, our Euro US, excuse me, we're now up 36 pips for $181. We're now pushing, we're almost $500 on the day. In a couple of hours trading, we've done 1% of the value of the account. A lot of major funds can't produce those results in 6 months' time. So it's very interesting when we look at things from this perspective. So looking at the Great Britain US, we're a little bit overbought. So this told me, okay, I'm not going to get in at the 151.39 level this morning. I'm going to move it back a little bit. I expect it to move back. What is another indication here? Well, this is a very interesting thing right here too. The neural index. All of a sudden we go from 1 to 0. Does that mean, the neural index, guys, is about a 24-hour indicator. It's an excellent daily indicator. You'll notice that the neural index is on the daily report. It is not a long-term indicator. So what this is doing is it's telling me by using my short-term indicators with my long-term indicators, essentially it's telling me to stand back, let the market come right to me. And that's exactly what it did. So I can identify the predicted low, 150.61. Well, it only got to 150.80. Does that mean Vantage Point was wrong? Absolutely not. That's not at all, because Vantage Point under no circumstances is suggesting for you to sell this. What they're saying is that we have a very clear uptrend on this, and when it pulls back, we buy on dips. So essentially in my trading, I do one of two things. I buy on dips or I sell into strength, and I stick with the crossovers from Vantage Point and the daily report, pulling it all together, not just using a short-term cross